Good morning, or depending on where you are, good afternoon or good evening. My name is Steve Strauss. I'm the senior USA Today small business columnist and author of the Small Business Bible, and I'm happy to welcome you to the latest Dun & Bradstreet Credibility Access to Capital Google Hangout series. Now, there is a mouthful. We have a great topic for you today. You know, back when I practiced law, one of the areas I practiced most in was helping businesses get started and grow their business, and funding and money and that kind of thing. And I've actually written a couple of books about that, including, as I mentioned, the Small Business Bible and a book called Get Your Business Funded. And one of the things I know is that money is an important thing for small business, right? Finding the money you need to start or run or grow your business is a topic we all deal with. And so we have a great panel with you today. And whether you're new to business or you're a long time in business and you need money for your business, we're going to share with you some alternative ideas today, some that I bet you haven't heard about, and some options and programs and businesses that are going to help you get the money you need to do your business. So let me introduce my panel to you. I'll introduce them, and they'll actually introduce themselves. With me first is Brett Barris, who is the president of Credibility Capital. Welcome, Brett. Introduce yourself a little bit.
Sure. Thank you, Steve. Thanks for the opening. I'm president of Credibility Capital, and we are a new marketplace lender in partnership with Dun & Bradstreet Credibility Corp. And our product is, you know, straight down the middle, 2-year monthly pay, fully amortizing loan, and it's really meant for high-quality small businesses that are just being overlooked by banks. And we're planning on launching in market with our first loan by the beginning of April.
Super. Thank you so much. Next is Catherine Petralia, who is the COO of Cabbage. Welcome, Catherine. Introduce yourself.
Hi, Catherine Petralia here with Cabbage. We provide working capital to small businesses through a real-time technology platform that allows customers to come to our site and get access to funds in less than 10 minutes.
Nice, right? Next is Jordan McAvoy, who is the VP of Marketing for Fundbox. Jordan?
Hi, thanks, Steve. So I'm VP of Marketing at Fundbox, and essentially what Fundbox is solving for is small businesses' access to short-term working capital. So, you know, very similar to what Catherine mentioned, I think there's been a change where people can access short-term or longer-term loans in a very expedited fashion. We take 4 pieces of information from a business and can approve them on the same day to get access to working capital to invest in their business.
Fantastic. Next up is Brock Blake. Brock is the CEO of Lendio. Brock?
Hello. Thanks, Steve. Appreciate the intro, and glad to be on this. Lendio is a small business lending marketplace. We talk about 3 things that are important to us for a business owner. Options, so all the options in one place, every different type of loan product you can think of. Speed, doing it in days, not weeks or months, and trust, helping that business owner have a great trusted experience. And so think of us as kind of like the kayak for small business loans. We try and bring all the options into one place.
Nice. And finally, we have David Teichner, who is the Chief Revenue Officer of Forwardline. David.
Thanks, Steve. I appreciate the intro. So, as Steve mentioned, I'm the Chief Revenue Officer of Forwardline. For the past 12 plus years, we've been a direct lender, lending money to small businesses all around the country, and been able to do it in a very expedited fashion, similar to the other panelists that just spoke. And we've done it successfully for thousands of businesses and put hundreds of millions of capital out in the market.
So, I told you, we had a fantastic panel. You guys are the pros, and welcome, and we're really happy to be with you today. Let's start generally by looking at this alternative funding and lending universe. I think typically when people think about funding their business, whether for startup or growth, they think about bank loans, or friends and family, of course, is one of the chief ways a lot of people start their business. Their own assets, of course. But there really are a lot more options that people don't know about. So, Catherine, let me ask you to start with. Give us your overview of the alternative funding and lending universe, what it is and how it might work.
Well, I think the most interesting thing, if you're a business and you're looking at getting financing, is that every business is a little bit different. So there are a lot of funding options, really, depending on what type of business you're in. Sorry, of course, right this second. So, if you are a business that's been around for a long time and you're generating a lot of revenue, then there's a good chance you could be eligible for an SBA loan that you can get from your bank. If you need less capital, less than $100,000 or $50,000, then you might want to pursue an alternative lender that is going to look for less time to business or less revenue, or is going to be able to handle a lower dollar request that you're going to want to make. Then there's options like invoice factoring. There are a lot of companies that provide those kinds of services as well. So the question is, how long do you need the capital? What are you using it for? What's your ROI on that transaction? And how long and what kind of business are you operating? So I hate to be so vague, because a lot of the people on this panel today are going to be able to answer some of those questions. For some of those issues specifically, Cabbage is a little bit different because we really service basically all types of businesses. But our loans may not be best for some businesses, especially if they have access to lower cost capital, which again, some of these panelists can provide.
Super. So Jordan, let me ask you, what's your overview and your take of alternative lending, alternative funding?
Yeah, I think what's really interesting is you hear about these catchphrases like big data and just the sheer amount of open connectivity between platforms and devices, and small businesses are benefiting from that. The byproduct of all of that is they do have a lot more options. And as Catherine said, there are lots of different products out there depending on the needs of their business. I think the other thing that's really interesting is this open connectivity and this access to data has reduced the administrative aspect of getting access to capital significantly. So I think the stats that I've seen most recently are somewhere between 25 and 40 hours for a small business to go through the administrative process associated with getting access to capital. And that has been greatly reduced. Some to less than a week, less than a day, just a couple of minutes. And the other piece of that is using technology. Small businesses can also get access to smaller amounts of capital, where before a bank might not lend an amount of money that was too small because it was unprofitable for them. Now, folks like Fundbox, we can actually lend out as small as $100 or advance as small as a $100 invoice, and give somebody access to that amount of working capital. We obviously go up from there, but the dynamics of how this environment works have changed drastically.
Well, I think that point is so well taken, that technology really has changed the playing field here. And one of the reasons we're all here today, and one of the reasons you're all here today, is because of technology. It really has created a bunch of new options that weren't available even a generation ago or so ago. David, what about you? How do you see it?
Again, great question, and I agree with a lot of what was said. I mean, the good news is there are a lot of options, right? So depending upon the business, there are a lot of options. But I think the important thing to think about is why are they looking for capital? How are they going to use it? And ultimately, what's it going to do for their business? Because once they can really understand that, then they can look at the options and look at things like term, clearly, of course, rates. How are they going to pay it back, and make sure that all matches up with their need and use of the capital. But probably the best point, again, is that there are a lot of options, and there's reasons why. If you look at it, 98% of the businesses are these small businesses, yet if you look at a recent report, 70% of them last year were not able to get funding that they were looking for, either because they didn't get approved or they were just frankly so discouraged that they didn't even go to seek that capital. And again, most of that was through traditional channels. But again, the great news is, folks on this panel and others can provide that solution for them, again, as long as they understand what they're looking for and match it up to the right partner.
Well, and that's a good point. And I think maybe the best way to go right now is to ask each one of you what you offer to people who are watching today in the way of alternative lending, because you all do something a little bit different. So, Brett, let me start with you. Why don't you tell us a little bit about, your local marketplace lending and funding and how Credibility Capital fits in and what you do and how why a small business might come to you and how they might get funding through you.
Sure. So we're a marketplace lender. I'm not sure how much folks know about the marketplace lending, but in the most simplistic vision, we're matching lenders, which are typically institutions, folks that are looking for yield, with borrowers, with high quality businesses that are being overlooked by banks, that are looking for a fair, affordable product. And within that space, our mission is we're really filling the gap between where banks are not lending and where credit cards come in. So call it the high single digit, the low to 20% sort of as an upper boundary. We're really filling that gap, with a very convenient product where the small business owner is utilizing some of the technology that we discussed before to go online, to have an application as much as automated as possible. We're utilizing some of our data that we have inherent with our relationship with D&B Credibility, and we're making it as painless as possible for a small business owner to have access to a very affordable product.
I think that's so important what you just said, painless as possible. I think one of the things people worry about, think about when it comes to funding and getting the money they need is that it's going to be a painful process. But really, as we're seeing with all of you, it's faster and easier than it ever was before. I love that. That's true with you as well, right, David?
Exactly right. And so to kind of maybe give a little bit of color on what we do and talk about that speed as well. So back in 2003, we really looked at the space and said, these small businesses, regardless of economic climate, have a real problem getting access to capital through traditional channels. And if you think to 2003, frankly, this whole industry didn't really exist yet. But what we did was we had actually a company, a small salon that was in the same building as us, and we were talking to them when we heard about their problems, and they wanted to grow, and they were looking to add some chairs in their salon, and they just couldn't get the capital. And a lot of the reasons were because they didn't have collateral, their personal credit maybe wasn't up to where the banks wanted. So what we did and what we've done today is we look at things very differently. So we look at the sales and, frankly, what we'll define as business stability. Can these guys afford a loan? Is a loan going to help them grow, and can they pay back timely and responsibly? And if those answers are yes, 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 we've created a process that takes minutes at most for somebody to be able to apply, get approved, and then very next day get the capital in their bank. And we have very flexible ways they can repay. We try to do it based upon the needs of the business. So whether they want to pay a fixed amount or a variable percentage of sales, we kind of leave that up to them based upon what's best for their business to help them thrive. But we have on a daily basis, we're having hundreds, and a monthly basis, thousands of conversations with these small businesses across the country. And again, to clarify, we're also a direct lender. So when a little bit different, versus what Brett was talking about for us, we do lend our own capital. So we run our own process, and again, if it makes sense for us, we'll write the check, and we've enjoyed really high renewal rates over the years because of the service we provide.
So that's kind of amazing. You're a direct lender, and you make decisions in minutes, right? That's what you said?
Exactly right. Exactly right.
That's fantastic. Jordan, why don't you tell us a little bit about what you guys do and how it works?
Yeah, so Fundbox is a little bit different in the sense that the problem that we're trying to solve is actually cash flow and short-term working capital for a small business. And so if you think about cash flow in a small business, kind of the expenses that the business incurs are fairly regular. Sometimes that influx of capital is irregular. So you have customers who are on net 30, net 60, net 90. We've even heard as high as net 120 terms on their invoices. And what happens is the business inherently has this cash flow crunch that occurs where their expenses outpace their income. And so our solution to that is through our platform, again, 4 pieces of information to get started. We actually pull in data from the accounting or bookkeeping system like a QuickBooks or a FreshBooks, and what we do is we allow somebody to advance an outstanding invoice. So instead of waiting net 30, net 60, net 90 on the terms of that invoice, they can actually get access to that capital in as little as 24 hours, and then we ask them to pay us back over the following 12 weeks. And again, it's meant to be shorter term access to working capital to help them get through these cash flow crunches that actually occur very significantly in healthy growing businesses. And so, we really look at our product as a way for the business to invest and maybe take that risk on taking the additional job that they maybe didn't have the confidence to do, or hiring that additional employee.
Well, and the other thing is, especially for a new business, one of the things I always tell people is you've got to plan ahead, because when you're new, one of the worst things you can ever have happen is have a cash crunch, 3 or 4 or 5 months into starting out, right? So you guys help with that, and we love that.
Yeah, and the other comment I'll make is, we don't require personal guarantees. We don't require anybody to put their house up for collateral or their car up for collateral. So we try to be as business friendly as possible. And again, it's based on our ability to access this data that allows us to have more confidence in our underwriting process.
Super. So Catherine, I think a lot of people know or heard of Cabbage, although I'm not sure everyone knows how it might help their small business. So why don't you enlighten us and tell us how it works with you guys?
Sure thing. We like to say that we're in the world's second oldest profession because small businesses' need for capital has been around for a very long time. And it's not just because of the global financial crisis, which happens to be when we started, which is not the best time to start a business, I can tell you that. But we, I think it'd be interesting to tell you sort of what sparked the idea for Cabbage, which was an eBay API that they launched in 2007. My co-founder was working with a company that was using it to do some other things, but he thought, wow, wouldn't it be interesting to take that really rich, detailed information that can be automated and turn it into a model that can predict losses for small business loans. So that's Cabbage was born. So we started actually with online businesses. We started with eBay and PayPal and then moved on to Amazon and Yahoo and Etsy and all the usual suspects. In the last couple of years, we've actually transitioned to serving all small businesses, regardless of whether they operate online or offline. We have more than half of my current portfolio is actually offline businesses, and 2/3 of all new customers are also brick and mortar businesses. But frankly, it really doesn't matter to us. What's important to us is that we can automate the process using real-time access to data that our customers use to manage their business. It could be information in their checking account or in their accounting package or payment processing data or shipping data, social data. It really doesn't matter. What we care most about is that we can maintain continuous access to that data because we provide a line of credit. So our customers generally tend to use it for permanent working capital. So it's a little bit different than some of the other folks that are out there. We didn't start the company to compete with Can and OnDeck and some of the big guys that are out there because, embarrassing, I have to say this, we didn't know they existed. We just said, wow, we know small businesses need capital and we think that we can help them find it. So we provide between $1,000 and $100,000 and on average about 7 minutes from the time the customer lands on their site until they have access to the funds. And they can get it as quick as the same day or a couple of days depending on their bank, and we all know how that works. So anyway, that's what we do.
Super. One of the things I hope people are seeing from this discussion so far is that there really are a lot of different ways to get your business funded. Banks are in the business, for example, lending you money, and that's an option for a lot of people. And we talk about friends and family, then we have all these online resources that you guys provide. So it's pretty interesting. One of the oldest ways that people have always used to fund their business is credit cards. Now, when I wrote the Small Business Bible, and back when I practiced law, I've come to my senses and don't do that anymore. But I did a lot of work with small businesses and credit cards and those kind of things. And I like credit cards a lot because they can give small businesses ready access to capital. Catherine, let me just follow up with you again. How do you see the use of credit cards for small businesses and funding a business?
I would say most of our customers actually use credit cards in some capacity to finance their business activities. It could be because they use it for, financing things like travel. There's a lot of things that a credit card can't be used for. It can't be used to make payroll. There are a lot of suppliers that don't want to accept credit cards. The other challenge I think that business owners face with using personal credit to run their business is if they are highly leveraged on personal lines of credit, it artificially deflates their credit quality, which not only makes personal borrowing more expensive, but it makes it harder to borrow even as a business because most lenders evaluate the creditworthiness of the small business owner. But having said that, if you are running a small business, you should use every type of capital that you have access to, including credit cards, especially when you consider the cost of that compared to other capital that you might have access to.
I think you make a good point. One of the things people really need to do is, as you just said, is keep their personal credit and their business credit separate to the extent possible. And there's lots of ways to do that. One is to go to Dun & Bradstreet Credibility's website and get a DUNS number, among other things. You want to separate your business and personal credit, but when you need to use your personal credit, that's valuable. A business credit card maybe is the best way for this discussion. Brock, what do you think?
Well, what's interesting to me is to look at this. This is alternative lending at its best. You look at each one of and I want to give a shout out to each one of these panelists because what they're doing as lenders is they're creating unique loan products, a unique way to underwrite business owners to help them get access to the capital that they need. What's interesting is that since the recession kind of hit in 2007, 2008, banks have been moving upstream. They're focusing on loans larger than $1 million because that's what they feel comfortable underwriting. They're not going to be as innovative as any of these alternative lenders. They're not going to be able to use technology the way that these alternative lenders use it. And so they know that if I focus on larger loan sizes, I can still use my loan committees, and I can still require them to fill out long form applications, and it can take 30, 60, 90 days, and so what you're starting to see is that banks are vacating this smaller loan sizes, and it's being filled by these alternative lenders. So for me, it's fun as kind of a marketplace that works with all these different platforms to be able to see new loan products popping up, new innovative ways to underwrite, so that more business owners can get access to financing. Our focus is to be kind of in the middle and say, all right, business owner, you come to one place, and you, based on the data that you give us, we're going to match you up to whether it be a business credit card, a cabbage loan product, a merchant cash advance, or equipment loan. Let's bring them all into one place to make that easy for that business owner to get the financing that they need.
Well, what about cash flow? I mean, there are creative ways to get your business funded using a shorter-term working capital, and I know, Jordan, this is right up your alley. Can you tell us how that might work and how that might provide a solution for people who want to get their business funded?
Yeah, absolutely. So I mentioned a little bit earlier, oftentimes you have these businesses that are healthy and growing that face significant cash flow shortages because they might have an extra project that they're trying to do, or they might want to hire that extra employee. And this is kind of the space that we play in at Fundbox, is we want to work with these healthy growing businesses and allow them to take these outstanding invoices that they have, advance them, and get access to that working capital so they can then invest in their business and give it to them for a short period of time in a usage-based model where they only use it as long as they need it. I think it's a little bit different in the sense of when you have an outstanding invoice with somebody you have a long-term relationship with, you also know that you have some level of confidence that that invoice is going to be paid, and so you're borrowing within your means, or you're taking access to working capital within your means. And I think this is just a really, again, it's a unique product that allows a small business to have another tool in their arsenal to address the problem of access to working capital to get through these cash flow crunches that occur.
Oh, and then what about merchant cash advances? This is another way. David, you guys work with merchant cash advances. Is that accurate?
We do. So we absolutely do. So we do merchant cash advances and loans themselves. Quite honestly, from a merchant's perspective, as you look at pricing and things like that, there's, at least from our company, there's no difference. Really, the difference is how you're paying back the financing. So for merchant cash advance, typically the way they're evaluated is based on recent credit card sales. So a lender like us will look at a merchant's recent, say, the past few months of credit card sales, and we'll do an analysis to say, well, based upon them wanting to borrow, let's say, $20,000, we're going to withhold X percent of their credit card sales on a daily basis. So pretty much what it means is they're going to just pay back through a percentage of credit card sales over the next, call it 6 to 18 months. But the reality is there's no fixed term on an advance. So it's really however long it takes to pay back that amount using the percentage of their sales. So the good thing from a merchant's perspective, and the reason why a lot of merchants like this, is it's extremely cash flow friendly, right? So if give you a great example, we have a customer actually just renewed yesterday, and one of the things that they were boasting about and excited about was they're in the Midwest and the weather's been brutal, as a lot of people know, right. And they've had many days where they couldn't really generate the revenue. Some days they had to close down, some days people just weren't showing up. And in those days, they're paying us either nothing or very little because it's a percentage of sales. And then clearly the days where they're having higher revenue, they can pay back faster. So it's a very cash flow friendly way. That said, there are some businesses that say, hey, I don't like that. I want a very fixed term, fixed dollar amount. in which case, again, for companies like us, there's that solution as well. But that is what a merchant cash advance is.
So is it necessarily a lump sum, or is it an ongoing thing, or is it both?
Well, they'll borrow they'll borrow the 10,000, but the payback will be a percentage of their daily sales. So again, if they borrow 20 grand, let's say for instance they're paying back 10% of their daily sales, it will just all be based upon how much they're generating that day, and maybe they'll pay back in 6 months if sales are much faster, or it could take longer, up to the 18 months.
Now, Brett, I bet you want to jump in here because Credibility Capital works, in this area too, right?
Sure. So we don't offer merchant cash advance. We recognize that it is a popular product. It is serving a market need. It's a much different product from what we offer. Our vision at Credibility Capital, our views is that while it is serving a market need, there are many borrowers that are overutilizing merchant cash advance because it is so available. And while it's great for some folks, the businesses that we're targeting, we're trying to convert those businesses to a more traditional, 2-year straight down the middle product. And I don't mean to be disparaging of it just because it is feeling, as I said, filling a real market need, but that's not really what our specialty is.
Gotcha. Well, I think the important thing is that there are all of these different funding options available. In 2010, right in the middle of the not-so-great recession, my editor at John Wiley & Son came to me and said, "Hey, Steve, let's do a book about funding because funding for businesses was so hard at the time." He said, "Let's come up with, find as many different ways to fund a business as you can. Let's create a book." And so we did that. I ended up with 25 or so different ways to fund a business, which kind of amazed me. And it's everything from merchant cash advances to what you do, Brett, to business plan competitions and crowdfunding, which is what we talked about in our last Dun & Bradstreet Credibility Hangout. There's lots of different ways to fund a business. Now, one of them that a lot of you do is getting a line of credit. Catherine, this is probably up your alley. Is that right? Catherine, can you hear me?
Oh, yeah, I did. For some reason, you cut off for a second, but now you're back.
Oh, so I was asking you about lines of credit.
Okay, yep, sure. I'm hearing an echo. Or somebody's getting twice or something like that.
Yeah, you're having an echo. I'm not quite sure what that is. So let me for now. This is interesting. Catherine, after you, we'll talk about lines of credit.
Okay, so we provide a line of credit. We actually started out as a merchant cash advance provider, which frankly didn't affect our product at all because it's always been sort of permanent access to capital. We like to describe it as a line of loans. So basically, the line is there permanently, but every transaction is paid off either in 6 or 12 months, depending on the product the customer has selected. We're looking at making that longer, but the idea is that businesses have episodic needs for working capital. Some of them need it more often than others. But the nice thing is with the line of credit, you're able to choose the amount that you need at the time that you need it, not take more than you really need, and also pay fees on that, by the way, when you don't need that much capital, because it just makes it that much more expensive. The other nice thing about a line of credit, at least in our case, and I think some other folks on the panel work this way too, but you're only paying when you actually are, when you have a balance. So if our customers pay early, which most of our customers do, most of our customers are in the 6-month payment period, they pay it off in under 4. That means they're only paying fees for the months in which they have a balance, and so that's really useful for them too, and the fact that they pay it early tells me that they recognize the value of that benefit.
Well, let me follow up with you for a second. What do people need to know about getting ready to come to you, or maybe any of you, to get a yes? What does it take to get a yes? Catherine, I'll start with you, and anybody else who afterwards wants to jump in, I'd love to hear. But to get ready for this kind of funding, this alternative funding, what do you need to do?
Well, I'm stealing some of my thunder for what I was going to say at the end, but I think the most important thing is to be organized and consistent. So let's say that you're a business and you have a lawn service, and you have 4 trucks, and you have a lot of equipment, and you use QuickBooks or you use Xero or Sage or some other accounting data. Make sure that you use it consistently. Make sure that you're using the same checking account for the whole time that you're running the business. Make sure that if you have fleet cards out for your trucks, that they're using the same cards that whole time, because that consistency of data is going to help any lender, whether it's a bank, an SBA lender, or one of the people on this panel. It's going to help them understand your business performance over time. We're looking for somebody who's been in business for at least a year. We're looking for someone who's generating, at least, which is not a lot, you're going to laugh at me, at least, $5,000 or $10,000 a month in revenue, but, because we're serving all types of businesses. And again, consistent access to financial data and tools that the businesses use to run their business.
Anybody else want to jump in on just prepping to get a loan or funding or a line of credit?
Sure. I mean, this is David from Fortline. So again, for us, it's very simple as well. It's, somebody that's been in business at least a year. Our minimum threshold is actually $3,000 a month in credit card sales, which, back to what they need to be prepared, is, they need to have their tax ID number. They need to know what they want to borrow, how much they want to borrow, and what they're planning on doing with that money. And then, besides that information, it's their last 4 months of credit card statements, which again is really just for us to be able to verify revenue. That's it. If they have that information, we can get them a yes or no very quickly.
And Brock, what about you over at Lendio?
Yeah, I mean, I think it's similar. It really depends on the type of loan product that you're looking for, and the type of the financing that you need. The great thing, as you can hear consistently, is that I think gone are the days where you have to fill out a 30-page business plan and a very detailed financial model. Those things are certainly important to grow and scale your business, and I'm not arguing against those by any means, but with the use of technology, as a business owner, it's about gathering data that's verifiable. So your credit score, whether that be your personal credit or your business credit, I think it's important that you monitor that and know what your credit score is. You're looking at your bank statements to see the inflows and outflows of your bank statements to know what's happening from the health perspective of your business. And there's other types of loans that aren't really represented today. For example, equipment loans. So people want to see, okay, what is the equipment? What do you have title on that equipment? What other collateral might you have? But at the end of the day, at Lendio, we really look for a few different things: revenue, monthly revenue, credit score, time in business, loan size, and industry. Those 5 data points will really, give us 80 to 90% of the data that we need to determine which loan product is the best fit for that business.
Can you need those 5 again one more time?
So there's the credit score, time in business, monthly revenue, industry, and the amount of loan that you're seeking.
Okay. So Jordan, I want to jump over to you and talk a little bit about microfinance. One of the things I found very interesting is that microfinance really is coming into the forefront in a lot of ways, and people don't always need $50,000. Maybe they need $100 or $2,000. So for the sake of this argument, let's say a microloan is a loan for $2,500 or less. I know groups like Axion do that, and Kiva maybe does it. But why don't you tell us a little bit about microfinance and how you see it working? Jordan, you there? You're muted. All right. So, Brock, let me ask you, how about microfinance?
Yeah, why don't I pipe in there? So, I think microfinance is an interesting solution, and the way that we look at that is you say, okay, based on the time in business and the revenue factors, the toughest business owner to get financing for is someone that has a combination of their true startup, which means they don't have revenue, and they've got low credit. So if that combination is tough. If you have good credit and you're a startup, then there's options. Or if you have bad credit and you're not a startup, you've got some revenue, there's options. But that combination of I'm a startup, I don't have any revenue, and I've got bad personal credit is very, very difficult. And really one of the only options that I believe available, maybe someone on the panel will correct me, but I believe one of the only options that is available is one of these microfinance options, where your credit can be as low as $525. You don't need a ton of revenue. You need to be able to, with your personal income or from a bank account you have, you need to be able to repay the loan, but the restrictions on a microfinance loan is much, much smaller. The loan sizes are also smaller. On average, they're around $2,500, and it's usually done through Kiva or Axion, however you want to say it, ACC, ION, or maybe one through a local SBDC or score counselor. So a lot there's a if that's probably one of the only options that I'm aware of for that type of business owner besides going to friends and family.
Hey Jordan, let me ask you. Please go.
Yeah, so sorry about that. I had some technical difficulties, but I'm back now. So at Fundbox, we've used technology to reimagine what this underwriting process can look like, and so we'll actually allow somebody to advance as small as a $100 invoice. Our sweet spot is from $100 to $25,000, but the reason why the access to quote unquote microfinance is challenging in a lot of ways is because it's just a very unprofitable way for traditional lenders to dole out money. And so at Fundbox, one, we're able to use technology to make it a feasible business model for us. Two is we only need about 6 months of data. We don't look at things like FICO score. We actually look at a lot of other data sources to underwrite the business and look at the health of the business. And so somebody who is relatively young, 6 months of history, who has some customers and is doing some work, just needs access to smaller amounts of capital, that's somebody that we can service. It's a new way for somebody who's just getting started to get access to capital.
It's a fantastic option. As you guys were just saying, you don't have to have perfect credit to get a microfinance loan. So that's another option available. Another option that I love in this alternative funding universe are small business administration loans, SBA loans. One of the best friends your small business can have, I think, is the SBA. If I was to tell you there was a multi-million-dollar federal agency that's that's there to help you succeed, you might be interested in that. And that is what the SBA is and does. Now, the SBA doesn't make loans; it guarantees loans, but because of that, it allows people who may not otherwise qualify for a loan to get a loan. Catherine, do you guys do SBA loans, or what is your knowledge and background on small business administration lending?
Well, our bank partner is actually one of the largest SBA lenders in the country, and so we've learned something about it from them. It's funny, there was an article yesterday morning in American Banker, and I don't know if you guys read it, but it really irritated me because the CEO of one of the top banks in the U.S., Wells Fargo, was quoted as saying that there was very little unmet demand in their business customer population for borrowing. And I was like, what the hell? How is that's impossible? We know that there's tons of unmet demand, but they're talking about loans that are under $1 million. They're not thinking about the loans, and they cited the same Harvard Business case study where they found that it was the demand for loans under $50,000 that was actually the biggest demand, the most need, and then the most unmet need. But the banks have a very hard time servicing those loans because it's just not profitable for them. The problem with SBA loans is banks are the ones that are responsible for making those loans. So it's their human costs they're doing the underwriting. It may be guaranteed. It may not have a lot of risk, but they also don't make a lot of money making those loans. So the problem is their interests aren't aligned. It requires individuals and humans to make those SBA loans happen, and when you can get one, they're awesome. It's very low cost, but it takes a long time to jump through the hoops, and a lot of times we have tons of customers that come to us, and they could qualify for an SBA loan or a bank loan, but they don't want to take the time to do it, and time is money for a lot of business owners.
That's very true. But one of the cool things I think about the SBA is that it does, in fact, give people another option. You can go to a bank, and if you qualify, fantastic. As I said, banks are in the business of lending to small business, and they want to. And if you're ready for it, then that's going to work for you. Maybe one of these alternative options that we're talking about are going to work for you, or a microloan, or you can find an SBA lender and have the qualifications be a little easier. So there are lots of different ways people can find the different funding, and a lot of it, as you guys have mentioned, is you're going to probably piece it together in the end. You're going to use a little bit of this and a little bit of that and something from Uncle Joe, and cobble together the money. Now, you may get it all in one place, and you may not, but you're going to have to be creative and do these different things. Before we wrap it up, I would be remiss if I didn't say, I need to hear your best tips. You guys all are experts and pros, and I would really love to know. So, Catherine, I'll just go back to you to start. What's your tip, your takeaway? I didn't mean to steal your thunder. What do you think? What do people need to know?
I think people, as I mentioned, consistency is really important, and using the same tools and keeping track of all the information about your business so that somebody else can use that to make a decision. I think the other thing I would say is just be honest. Don't try to hide the warts. Every business has challenges. Make sure that you're honest with whomever the lender is from whom you're seeking capital, because they really need to know the whole story, and they may actually be able to help you more if they know more about your business than if you keep something from them.
Rock, how about you?
Yeah, I would echo a lot of things that Catherine has said on the SBA stuff, but I'll leave it alone because I know we're wrapping up. For a business owner, my advice is that I think there's a lot of situations where the business is healthy and they're doing well, and they don't want to get financing until this catastrophe hits, and all of a sudden this catastrophe hits and they're in a bad spot, and that's the worst time to get financing because most of the lenders are seeing the same catastrophe on paper, and when there's other times where you've got a very healthy business, you probably could get access to lines of credit or other things like that, so you plan ahead. When the catastrophe does hit, then you're prepared. So that's my one piece of advice is to get out in front of it. Look for financing maybe when you don't need it, before the catastrophe happens.
We don't want catastrophe. I agree. Jordan, how about you?
Yeah, I would say I would echo the same sentiments that have been expressed so far. I think the other thing that people should do is do your homework. But don't be afraid to go with one of these newer alternatives. You can read a lot about the reviews from other businesses that are out there. You can see the sentiments that are expressed. There's a lot of journalism that's being done around this space, and there are lots of new options out there. And the other thing I would say is there are lots of new products out there as well. So don't feel like you only can use one specific type of product to get you through whatever you need to make your business successful. There are going to be lots of different options for you to choose. One might be great today, another one might be good tomorrow. And so just do your homework and keep an open mind.
Very good. Brett, what's your take?
Sure. In terms of preparing for a loan, we talked a little bit about it before, but one thing that I would add that hasn't really been mentioned is make sure your credit profile is accurate. Make sure it's up to date. Reach out to D&B Credibility and speak to your credit advisor and make sure that what the public views in terms of your business and your background is accurate, because like many credit reports, sometimes there are inaccuracies there. So that's where our relationship starts. And then I would say, just like the other folks on the panel said, know your products, do your research, and please check us out.
David, you're going to get the last word today.
Oh, thank you. So, what I would say is, and agree with everything everybody's saying, we keep talking about all these options, which is a great thing, but also being in the position of a small business owner, it can be overwhelming, right? Not necessarily from the folks on the panel, but there's a lot of people kind of calling them up and chasing them for these opportunities. And one of the things I would really recommend is do your homework and understand who you're talking to and and who those folks are. So not only look at the reviews, really understand the costs, right? Don't just take at face value when they say it costs X. Really understand what are all the costs involved. What are the repayments? Do your homework as well, right? This ends up being a marriage between a lender and the borrower. And so we're going to do our homework on you, but know that you have options and make sure you're really comfortable with who that person is that's going to be lending you the money.
That's a great point to leave it on, and we're going to have to leave it there today. I want to thank all of you for a really fantastic, interesting, and enlightening panel discussion, and Dun & Bradstreet Credibility Corporation for providing this wonderful platform for all of us to share our expertise. And thank you, all of you, for watching today, for working on your business. I hope the tips we gave you allow you to get your business funded, and I hope you've enjoyed this hangout. If you want to see our other hangouts or find out more information, you can go to the Dun & Bradstreet Credibility Access to Capital website. There you'll see other hangouts we had, tools, options, information, really very, very valuable. And so, I'm Steve Strauss. You can always find me online at my website, which is theselfemployed.com, or at Steve Strauss on Twitter. And on behalf of Dun & Bradstreet Credibility, thank you. We'll see you again on March 18th.
Thank you.
Thanks.